Sam Bankman-Fried's motion for a new trial claims crucial testimony from former FTX executives was absent, challenging the fairness of his conviction. The filing, submitted under Rule 33, is separate from his ongoing appeal and argues that missing evidence undermined due process in the FTX fraud case. Legal experts say such motions are tough to win, but the controversy continues to impact crypto market sentiment. Markets are pricing an 80% chance that the Bank of Japan will raise its policy rate to 1% in April, a move that could trigger global capital flows and impact Bitcoin. If the hike surprises with hawkish guidance, Bitcoin could see a sharp sell-off, but a gradual approach may keep volatility contained. Japanese treasury holdings and yen carry trades are key signals for risk assets this spring. When a major crypto lender suspends withdrawals, the industry takes notice. BlockFills, which processed over $61 billion in trades last year for 2,000-plus institutional clients, has temporarily halted deposits and withdrawals due to sharp market volatility. Management is working with investors to restore liquidity, echoing past crises like FTX and BlockFi, highlighting ongoing risk management challenges in crypto finance. When BlackRock moves nearly $300 million in Bitcoin and Ethereum to Coinbase Prime, the market takes notice. The asset manager's sell-off hints at institutional pressure, impacting crypto liquidity and price trends. Meanwhile, BlackRock's entry into Uniswap with its tokenized BUIDL fund and altcoin purchase marks a strategic push into DeFi, opening new possibilities for traditional assets on blockchain. A massive $308 billion flowed into Bitcoin in 2025, but the market cap actually fell by $98 billion. What's really happening? CryptoQuant's founder explains that heavy selling pressure and the divergence between market cap and realized cap mean Bitcoin isn't in a bubble phase. New whales have taken $1.46 billion in losses, and Bitcoin sits at $68,500, down 12% this week. Vitalik Buterin is calling out so-called DeFi projects, arguing that many are just centralized yield farms in disguise. He says real DeFi should use over-collateralized algorithmic stablecoins, not rely on assets like USDC controlled by single issuers. This debate is pushing the crypto community to rethink what true decentralization means for the future of finance. Even as Bitcoin tumbles, Strategy's CEO, Michael Saylor, insists the company will keep buying every quarter. With over 714,000 Bitcoins and $8 billion in debt, Saylor says they'll simply refinance if prices fall further. Strategy remains the largest corporate Bitcoin holder, showing unwavering commitment to digital assets. North Korean hackers are now using AI-generated deepfake videos and fake meetings to target crypto and DeFi companies. Google's security team reports these tactics led to over $2 billion in stolen crypto assets in 2025. Experts say trusted digital identities are now the weakest link in crypto security. Goldman Sachs' latest 13F filing reveals a $2.3 billion crypto portfolio, marking a 15% quarterly increase despite market volatility. The bank holds $1.1 billion in Bitcoin ETFs, $1 billion in Ethereum, and significant XRP and Solana positions, signaling a shift toward regulated crypto exposure. This move places Goldman among the most exposed U.S. banks to digital assets, reflecting rising institutional adoption and potentially influencing broader market sentiment. A magistrate and her mother escaped a crypto ransom kidnapping in France, highlighting a rise in digital asset crimes. 6 suspects were arrested after the victims freed themselves, with police confirming no ransom was paid. French authorities are intensifying efforts against crypto-related extortion, as recent high-profile cases show growing risks for those linked to the industry. Arthur Hayes just unloaded over $3 million in DeFi tokens after they plunged more than 85%. On February 9th, he sold ENA, ETHFI, and Pendle, all deep in the red, raising questions about DeFi's recovery and whether this signals more pain or a tactical shift. The sector remains fragile, with uncertainty ahead. If Bitcoin fails to hold the $69,000 to $72,000 support zone, analysts warn a deeper correction may follow. Technical signals show weak demand and persistent selling pressure, with daily and weekly charts dominated by red candles. Until Bitcoin reclaims key resistance levels, downside risks remain in focus for traders.